Hey everybody, how we doing? Chase here with our first daily analysis video. Okay, so if you've never seen any of my videos before, in terms of my daily analysis, typically what I do is I run through some of the successful plays from recently or any successful plays that I would have made or the group would have made, why I took those trades, and sort of just give an explanation behind them. Okay, so yesterday, I've still been working with my original group, and yesterday I did note for them that it would be a risky long if we were to get a 4-hour close above the resistance line here. So let's first take a look. We want to avoid we want to ignore this price action, right? Because this is on the way down. Once we finally have our range established, we could see that we never had a 4-hour candle close above this resistance level here. Okay, so we look all the way across, we never had a close above. All right, so this is sort of like a high time frame candle close type of situation, where we're looking to close above just a simple horizontal point. And I'm never one to really long into resistance, so that's why I do say it was a risky play. I'll show you guys how I would have played it. Unfortunately, I was sleeping at this time, but I do believe some of my members from my group might have played it. I've heard, I got a few DMs from a few people that said they played it. So it did work out, but it was risky. So let's talk about how we would have played it. So any 4-hour close above this resistance level here. So we see the 4-hour close above this resistance. You would have entered your position. You would have looked for, let's do a long position. And let's see, we would have probably utilized, the typical maybe 40, 50 point stop. Okay, so let's say a 50 point stop, right back down below the resistance that hopefully turns support. Okay, so what we're expecting is that this would turn support, and here's our sort of risk reward just for a simple target here. Let's say if our target was 7,000, which would have been a good target to start. So if your target was 7,000, you would have ended up with a 4.38 risk reward. In my opinion, those are the type of trades I take. I typically take anything above a 3 or a 4 risk reward is really where I look to aim for. Okay, so that's that trade. You would have enjoyed this massive pump upwards that we got today. We'll definitely talk more about that. Let's talk about my other trade that I had today. Let's see. My other trade was right here. We can see a typical type of high intensity play here. So if you're not familiar with high intensity plays, make sure you check out my little high intensity summary. We basically have a pennant here, a bull flag, sort of whatever you want to call it. We see here on the 15-minute that we have wick. We're getting resistance on all the wicks. So what we'd be looking for is a candle close above that resistance line. We can move down to, say, the 15. Still no closes on the outside, right, on any of these. So let's move down even further. Let's move down to the 5. We want to typically find the lowest time frame we can where the trend line has not been, invalidated, so to say. Okay, so what happens here is we are getting rejected, we're getting rejected, we're getting rejected. We come up, we get rejected once again, and then we finally close above. Okay, so right upon this candle close is where I entered another long. And let's see here. I took, this was the second trade I would have taken. I did take this trade. I didn't take the first trade because I was sleeping. So, yes, safe to say that. So how would I have played this one? Let's see. I'll show you guys how I picked my target. And I would have had stop back inside. Didn't need to be too far. We could see the little double bottom right here. Probably would have put it right below this little double bottom on the 5. So about a 21 point stop loss or something, no big deal. Switch over to the 4-hour time frame real quick just to get our target point as to where we want to target. Okay, we can see a resistance level right around here. So we're seeing, okay, see how we're seeing resistance here, all these wicks. We're seeing wicks here as resistance. We're seeing support here. Once again, we're seeing candle closes above here as support. So this is basically our level, and then I like to front run the level just a tiny bit, so I would move down a bit more to right around here. Okay, 75.70. The target almost hit. It didn't hit. When you are this close to your target, it doesn't hurt to just market close the position and take your, it's a 20-point difference. No big deal. You get an easy market close off. That's what I would have done. I was actually at the grocery store when I was in this trade, so I think my target was like 75, 65 or something, but I don't think BitMEX hit that. So anyway, I came back and closed at like 7,500. It is what it is. That's why you typically, if you're gonna set trades and you're not gonna be home or something of that nature, try to set conservative TPs, conservative target points, or take profit points, whatever you want to call them. Okay, so that was the second trade. Just a simple high intensity trade right there. So let's talk a little bit about the current price action. Let me see what chart I want to use to do that. Yeah, this one's good. Okay, so we'll use this one. So the current price action, what we could see here is an obvious inverse head and shoulders. We mooned out of the right shoulder. How would we have known? It was a pretty good inverse head and shoulders. You want to be able to look at the volume profile. What you should have on an inverse head and shoulders is decreasing sell volume from left to right. So we see here decreasing volume on the head, decreasing sell volume on the right shoulder. And what you should have is increasing buy volume from left to right. Okay, so decreasing sell volume from left to right, increasing buy volume from left to right. Okay, we can see here increasing, and then finally for the right shoulder, at the end of the right shoulder, we get a big spike. Okay, so the buy volume for this inverse head and shoulder was fairly accurate. Okay, it was pretty good compared to the typical scenarios we get. So looking at the big time frame here, we still are in this sort of massive wedge, if that's what you want to call it. If we look over at the daily, this sort of formation has been changed a bunch. I've seen people draw it as pennant. I've seen people draw it as descending triangle. Now it's possibly a falling wedge. Point being, it's not really a big deal. We just want to focus on the resistance trend line at the moment. So the resistance trend line is here, resistance, resistance, resistance. But we do want to be careful as the wedge starts to tighten up more and more. Typically, the tighter it gets, the more likely you are to either see a breakout or at this point, talking about just overall market sentiment. I don't want to say, because look, we want to look back. The last time we got a candle this big, obviously, we know when that was. That was in April. And it sort of gave us momentum for this big move that moved us into the alt season of May. So some people are probably thinking, oh, well, should we be longing right now? I can't willingly advise to just long from a position like this. I do think we need to see some type of healthy price action. When I say healthy price action, what I mean is I need to see some kind of retracement. We've hardly had any retracement, and that's a sign where I don't want to get too tinfoil hat on you guys on the first day. I'll let you guys get to know me better first. But truth be told, if we're looking at this price action, right, and we see, okay, well, these are the whales, this is the big money that bought here, and they never give you a chance to get into a safe position with good risk reward. It's just like these constant pumps and no retracements. Okay, even if we look at something like if we look at the 4-hour Stach RSI, it's insanity. When's the last time we saw something this spiked? It's completely irregular. It's been peaked for so long, so we definitely want to. And we had a bunch of bearish divergences we were coming up, and it's like they just completely ignored what was going on. And look, you never got a retracement to the level, so people weren't even looking for a candle retracement to get in. They were just looking for the top of the pump, and it never came. Look, for how many hours in a row? for 16, for 20 hours, you couldn't retest this line. So to me, it just says that, you know, big money moved up the price here. They got their buys in just like they did in April. Same situation. They got all their big buys off right in here. Then, you know, retailers started, you know, supporting the price, whatever you want to say. The big money was supporting the price, and then retailers were buying. And then we just keep seeing these pumps without a retracement. So I can't advise to long from this area. I'll be looking more towards, you know, my first level that I would feel safe, honestly, would have to be, you know, the 70.96 level I have labeled down here. You know, I would feel more safe about that. I mean, there's no chance. I'm just going to delete this right now because it feels like there's no chance that we would get back down there. And if we did get back down there to the neckline, to retest the neckline, you would have to think that, I mean, it's hard to even say what you would think. It would be super bearish, probably, if we were to go all the way back down and just start, you know, retesting the neckline. Doesn't seem like it's possible. So if we're really bullish, we might not even, you know, break around here, you know, 7,300. Otherwise, 7,100 is looking like a good risk reward. You know, probably get your position. You know, wait for a bounce off the level. I'm a big, you know, advocate, as always, of you know, a conservative type of method. Like, so let's say we break down, right, by some miracle, which, you know, I'm still sort of honestly a little confused on this price action that has zero retracements so far until just now. This is the first slightly retraced candle we're seeing. So what I like to do is I like to let the price come down. Let's say if it hits off the support, it bounces. Okay, you can see that as support survival. All right, you don't need to catch the knife on the way down. Just let it hit, let it break through the level a little bit. You know, let them run, you know, the stops or whatever. You know, if people got their stop losses down here, you know, let them do what they're gonna do. Let them bring it back up, and then once you see that it's sort of, you know, surviving the level, you hop in right there, and you put your stop loss back below wherever the swing low was, right around there. And as long as it's not too far away, right? You want to make sure your risk reward is obviously in a good place. So, you know, like I said, typically a 3 or a 4 or higher. Okay, so that's what I'd be looking for in terms of short positions. You know, this red area is definitely, you know, a whole sort of bearish, you know, area. And we want to also look at the trend line. And I'll be keeping an eye on how we're reacting to the trend line resistance, and I'll be keeping an eye on how we are reacting to, you know, this area here of bearishness. We could see it all right in here, okay? And if we use something like, you know, if you wanted to use the VPVR and find some confluence, you'll obviously see confluence in that area. That there was a lot of volume there in the previous times we've been around there. And you'll, there you go, see? So right here, once you pass that, you get this little volume gap. If we were to break above here, you know, and to break this trend line, we'd probably expect to move upwards towards, you know, the low 8s, I would say, and go from there. Okay, so I'd like to thank everybody very much. Very excited to get started with the group. Obviously, as time goes on, I'll be listening to all your feedback and adjusting, you know, anything on my videos or the style of my analysis in general. I'm always happy to make any adjustments that people want to see, or more information that people want to see, information that people think is unnecessary. Always happy with the feedback. Okay, so thank you very much, everybody. Have a great night, and really excited to get started.